The regular S&P 500, the market capitalization weighted S&P is once again showing extraordinary relative strength to the point where it may be getting a bit too much. The regular S&P, the equally weighted one that we're talking about, is equally weighted, which that means that if we have very large companies like Nvidia, Microsoft, and others that are doing very well, it is going to disproportionately move the S&P higher, where the average stock in the S&P may actually not do so well in relation, and that can kind of distort the index performance. So what we are noticing here is, once again, if we take the regular S&P, so again the market capitalization one that's benefiting from massive moves and steady moves higher in Nvidia and all those big names, that one in relation to the average S&P, or the regular equally weighted S&P, is once again blasting higher, and so the momentum is once again getting very, very extreme. Typically, when we get to these points of extremity, the S&P take a bit of a pause. I'll try to show this you another way. If we look at the S&P here, just over the near term, what you want to focus on here is that sort of breakout attempt that the S&P's had. It's now pulled back a little bit here as I'm recording this. What's interesting, if we take the equally weighted, so the non-market cap weighted, you can see that it also had a breakout, but it's making a lower high versus the high in April. So that is also one of the reasons why we still think there's another potential downside in equities here, and potentially a trading range that we could see develop over the course that could last all the way into the elections. In the very, very near term, we are seeing our momentum indicator turn bearish. That's if you look at that down below, we had a bullish momentum. Now we're going back into bearish, but we really do think that this market cap weighted S&Ps, or the regular S&P, is getting stretched relative to its equal weighted component. So we wouldn't be surprised if what ends up happening here is something that looks a little bit more like this, where we're going to start to see a trading range develop. So maybe for the SPY ETF, that means on the upside maybe 530 or 540, on the downside something like 490. A trading range that could develop here through the summer, into the autumn, and then kind of into the election. So we'll have to see how that plays out. In the meantime, there are wonderful trades that we can put on to take advantage of exactly this. I like to do it with using something called options credit spreads, which allows us to sort of generate an income from not having to be directionally correct in the market as much. That's going to be the topic of this week's discussion. As always, we'd love to see you in this week's research call on that. Bring a notepad. We're going to show you exactly how that strategy works. We're going to lay it all out for you, completely free for you to learn. We'll see you in that strategy session this week.